and on the daily lives of European citizens. Due to this key role in building upon past collaboration, it's important to have a regular, well-established and structured cooperation with the Eurogroup. In addition, the specific context of the economic and fiscal consequences of the war in the Middle East places again the Eurogroup among the main political actors to discuss the way forward, how to protect our economies, and at the same time how to ensure our economic resilience over the long run, our debate of utmost importance. So we are happy to have this discussion today with you, and we wish notably to know more about the Eurogroup views on this. A few words on the choreography today. There will be an opening statement from the chair of the Eurogroup, and then there will be a Q&A session. Since this is I think we are going through a difficult time. I will leave a lot of time for this opening statement to make sure that we can have a lot of discussion after this opening statement. So one more time, welcome in this committee, and the floor is yours.
Thank you very much, Chair. Honourable members of the European Parliament, it's a great privilege and a great pleasure to be joining your committee for my first economic dialogue as President of the Eurogroup. I hope it's the first of many. I very much look forward to our exchange of views on the multiple challenges our economies are facing at this pivotal moment, exactly as the Chair suggested. Geopolitical, environmental, and technological changes are rapidly reshaping the world we live at, fragmenting the global economy and fundamentally moving us towards a new world order. The world is changing fast, and it will not wait for Europe. In this environment, Europe cannot remain an area that just reacts. It must become a power that chooses, that shapes, and that asserts its role. The euro area economy has shown remarkable resilience after successive exogenous shocks, the pandemic, Russia's unjustified war against Ukraine, and the induced energy crisis, along with a trade shock. We have proven that we can endure. The question now is whether we can lead. As we meet, a new supply shock in the form of another energy crisis is testing our economies once again, painfully highlighting our strategic dependencies. Energy does no longer only reflect costs. Energy is also power, energy is also security, and fundamentally, energy is also sovereignty. It is quite difficult to predict how severe the impact is going to be in the end, but the war in the Middle East does have the potential to severely disrupt the functioning of our economies. Recent data and indicators already point to rising inflation and weakening economic activity. We are in the context of a stagflationary tendency. We have seen that institutions like the ECB and the IMF have produced inflation and growth forecasts under various scenarios, reflecting progressively worse assumptions about the intensity and the duration of the conflict as the time passes by. Scenarios obviously are always useful and they do offer some insight, but at the same time, the situation has, to be frank, been very volatile and uncertainty remains quite high. Uncertainty, in a broader sense, is becoming our new operating environment. Things may also not develop linearly, and we may end up in a different scenario altogether still. The Eurogroup is closely monitoring these developments, drawing on analysis by the Commission, the ECB, the IMF, and the International Energy Agency. Let me now zoom in on the policy response. We took note of what the ECB Governing Council said last week. The ECB will do what it needs to do. Monetary policy is well positioned and determined to return inflation to the 2% target. Price stability is the foundation of citizens' trust, but fiscal policy also has a fundamental role to play. Many governments are taking measures to ease the burden of higher energy prices on businesses and on households. Protecting vulnerable groups is necessary for reasons of social fairness and economic stability. No European strategy can effectively succeed if it is not socially fair. We are now, however, quite conscious that to contain inflation, it is important that fiscal support measures are temporary and targeted, preserving the price signal necessary to reduce energy consumption. Moreover, support measures must not jeopardize fiscal sustainability. We cannot respond to every crisis through mechanisms that will effectively create another type of crisis should the measures not be optimally targeted and optimally designed. Fiscal space is limited at this point after earlier shocks, and this comes at a time when we have to respond to substantial investment and substantial security needs. Fiscal policy should operate, obviously, within the framework of the commonly agreed rules. The existing arrangements already provide a degree of flexibility which can be appropriately used under the current conditions. Obviously, the response is a function of the conditions that we have in front of us. Should the conditions worsen, we readjust and we re-examine the possibilities that we have in front of us. Having said this, if I may add, at yesterday's Eurogroup we had a very interesting presentation on behalf of the IMF to address your question. And I think that two data points stand out as the most important ones. The first one is that untargeted measures primarily end up helping the rich rather than the poor. And the IMF corroborates this both in terms of gasoline support measures and electricity support measures with a ratio of 3-to-1. And this is why, amongst other things, the Commission is advancing this perimeter of targeted, temporary and tailored measures as the proper ones, the appropriate ones to use in this environment. Second, the IMF provided data to corroborate the point that the impact that we're now witnessing, that we're now feeling from the crisis is 12% less than what it would have been had we not diversified in terms of energy since 2022. Those things together showcase that on the one hand, the types of measures that we should be using as governments should fall within this perimeter of temporary, targeted and tailored, but on the other hand, they should also fit the long-run strategic priorities of the European Union, be they in terms of investment in grids, in terms of storage, in terms of our overall sovereignty capabilities, both in the energy field as well. The Eurogroup will continue to review and coordinate the implementation of national fiscal policies, and we will do our customary stock take of the fiscal stance in July. I have to say that I'm optimistic that the euro area economy can weather this latest shock. Yes, yet as I have pointed out on other occasions, resilience is not a growth strategy. Resilience is playing defense. Europe now needs to play offense. If we limit ourselves to resilience, we risk managing stability instead of building growth. Many structural issues weigh on the medium-term economic outlook and on prosperity. And with the current level of growth, we will not tackle the challenges that we have ahead of us. At our current speed, we will simply not reach our destination as quickly as we should reach it. Current growth levels will not suffice to address demographic pressures, productivity and competitiveness gaps, economic security concerns, or the question of monetary sovereignty itself. Addressing all of this requires a wide-ranging reform and investment agenda focused on strengthening our competitiveness and sovereignty. And I have to say here, sovereignty is not about isolation. It's about having choices when others would deny them to you. The Eurogroup is fully committed to help create the framework conditions necessary for this. Let me briefly walk you through key areas in our work program, starting with energy. Our response must be clear and structured: energy, investment, financial and digital strength. We, of course, fully respect the prerogatives of the Energy Council, but finance ministers take an active interest as energy is central to our competitiveness and economic security. There is broad consensus in the Eurogroup that while the private sector will play a key role in the necessary transition to a homegrown non-fossil energy system, the public sector should also contribute. Moreover, there is recognition that energy is a common public good with a clear European dimension. Efficient energy markets and integrated infrastructure in this sense are absolutely essential. I would say they're absolutely existential. Another area where urgent progress is indispensable for our competitiveness and autonomy is the Savings and Investment Union. Europe has no shortage of savings, as you all are quite aware of, but too much is being invested in other jurisdictions. Europe is not weak. It simply does not invest enough in itself, and this is something that we must collectively change. Deep, liquid and integrated capital markets are necessary to channel European savings into productive investment at home. Alongside the Capital Markets Union, a competitive and integrated banking sector is also crucial. Another topical and very important issue that we will be paying close attention to is the safety of our financial system in the presence of cybersecurity threats. And this brings me to our work on digital finance. First, It seems to me that the case for a digital euro is by now abundantly clear. If we do not build European solutions, we will import them, along with the dependencies that those solutions will create. A digital euro would enable us to secure monetary sovereignty, ensure the resilience of our payment system, and provide a platform for private sector innovation as well. And my understanding is that the Council, supported by the Eurogroup, agreed on its general approach late last year. I understand that the European Parliament is moving closer to an agreement in its position. I sincerely hope that the trilogue negotiations on the single currency package can be successfully closed in the second half of the year. It is essential that together we bring the digital euro over the finish line as soon as possible. Let me say this bluntly, because this is an area where we have very rapid technological innovation. It's not every year that counts, every month counts. And we need to be able to deliver this project as quickly as possible. Let me also say that this overall digitization of the financial sphere, both on the digital euro side, which is the public infrastructure, and on the private innovation around it, enabled by the MiCA regulation and other institutional innovations that we have adopted, is absolutely existential in order to capacity build the international role of the euro. And this is something that we will closely monitor. A stronger euro means a stronger Europe in the world. Last but not least, I would like to recall that shortly after I assumed my new role at the helm of the Eurogroup, we welcomed Bulgaria as the 21st member of the Eurogroup, of the Eurozone. This shows that the continued attractiveness of the euro is there. Europe has talent, Europe has the resources, Europe has the capacity. Now we must show that we also have the determination. I am very much looking forward to your questions.
Thank you. Thank you for this opening statement, dear President Kyriakakis. I will now open the Q&A session. And you will have 1.5 minutes for the question. You will have 3 minutes for the answer. I think there will be a lot of questions, so please respect your allocation of time. And if we have more time available, then of course there will be a catch-the-eye process. So I will start with EPP and Ludek Niedermayer.
Thank you, Madam Chair, and thank you, President, for being here. I guess this was one of the best speeches I have heard here for some time. I very much appreciate your two references on the way how you can very wrongly help so-called families with the high oil and petrol prices. Unfortunately, not all your colleagues are listening to that. And the second, I like the reference to digital euro. But to save time, I would just give you a very simple question. Tell me 3 the most important things that you would like to be delivered in next 12 months to get on the track, to speed up, and to head towards where we should be.
Well, thank you very much for your question. To be frank, the Savings and Investment Union, if we unpack it, is many things at once. It involves elements from how to go from startups to scale-ups. We discussed this yesterday. It involves more banking consolidation in the European Union. So if I had to codify things that I consider to be quick wins, in a sense, things that we can deliver more quickly, the first one would be the digital euro. We need to meet the time frame as defined, because as I mentioned, every month counts, and we, as European finance ministers participating in the Eurogroup, should play a role in that. I understand that now, obviously, this is more in your hands as European parliamentarians. Second, within the context of the Savings and Investment Union that I mentioned before, I think that we must revive the banking union elements, and we need stronger and bigger banks. The discussion emerging in the last weeks of anthropic mythos, I think, showcases why we see the security aspect of this, but at the same time, if you look at the investments of European banks, please compare them to the technological investments that American and Chinese banks are making. You will see that in terms of size, they are comparable to banks in the UK and banks in Japan, even though the Eurozone is much larger. We need bigger banks that will be able to make more technological investments, and we need to act as facilitators of this. And final point, if I may add it, I think we need to have a common understanding on technological issues as well within the context of European finance solutions. Technology interreacts with financial decisions. We need a clear technological doctrine. When we speak about technological sovereignty, even us in this room, we do not mean the same thing. We sometimes employ the same vocabulary, but we mean completely different things. And in order to have a strong presence in any such discussion, be that a domestic discussion in a member state when we're making a technological investment, or be that a global discussion, a multilateral discussion, a transatlantic discussion on technology, we shouldn't be, if I may use a term, asymmetrically interdependent. We need to capacity build our own capabilities in Europe, our own European technological champions. This is what will enable us to participate more in critical supply chains, and to thus have a stronger presence at the table when any such discussion emerges. So having a clear doctrine, let's say, a clear approach on this, I think would also help, and this is something that we must do quite fast, because frankly, technological innovation and technological deployment is moving at a pace which goes contrary to the typical understanding that we have. We understand the world linearly. Technology is changing exponentially. It was always changing exponentially. It's Schumpeterian, creative destruction, but the scope, the scale, the speed of that change is in the weeks. The problem is that we understand the world linearly, and the typical accusation that policymakers around the world receive is that we react sublinearly to the policy things, to the policy challenges, les enjeux that we have in front of us. We don't have that luxury right now, especially on AI. I would say that it has elements of both a moon race and a nuclear arms race, simultaneously, because it has a productivity challenge, a labor challenge, an overall economic disruption challenge. It will change the job of any minister, be that the Minister of Education, the Minister of Labor, or the Minister of Health, on the one hand. On the other hand, unless we regulate the problematic aspects, the critical aspects, the security aspects of that technology as fast as possible, we run into risks that the exponential nature of the change does not fully enable us to foresee.
Thank you. For the S&D, Nikos Papandreou.
Thank you, Mr. Pierrakakis. Kallos ήρθατε. I'll speak in English. Very excellent presentation and makes the Greeks proud, I think. So you did speak about the digital euro, and I'd like to hear a little bit more on that. We agree with the huge need for sovereignty, and the geopolitical case for the digital euro is obviously stronger than it was a few years ago. And the majority of the parliament also seems to be and has been voted in favor of the digital euro. But you, as an outsider from this process, how do you see the legislative process going so far? And one other question, if I can ask, based on your AI, I read that yesterday Trump is asking for a pause on AI to be reviewed by the government before it's introduced. I don't know if you heard that. This is something that makes sense for us? They're really worried about this mythos, a nice Greek word. So that's a second question. Thank you.
Thank you very much, and thank you for your kind comment, Mr. Papandreou. Let me begin by looking on the digital euro from a helicopter view perspective. So what is happening in the world right now? We have a digitization of the financial sphere. What are the Americans doing? They're not going to have a digital dollar. They're using stablecoins. They advanced an institutional framework that enabled them to have private innovation in their financial system. Why did they not opt to have a digital dollar? For various concerns. I would call some of them actually cultural. Premia on privacy, as they would describe it, or other elements. The Chinese are doing the exact opposite. They will only have a digital version of their currency while not allowing for stablecoins to materialize in China in the similar manner that you would see them in the United States. What are we doing? In effect, the core strategy should be the public infrastructure. So the core strategy is to have the digital euro. I think that this can give us an edge if we want to increase the international role of the euro and allow for the private innovation to occur around it. Now, does MICA allow for this private innovation? It does. But if you look at the global status of stablecoins, you will also see that 95% of stablecoins are dollar-backed and less than 1% are euro-backed. This means that the digital euro should be the core element of the strategy per se. I was recently in Washington, D.C. and had a discussion with experts from the field, and what they told me is, you will have an edge if you do the digital euro, do it as fast as possible. And this came from people in the market. So, obviously, the timetable that the European Parliament will advance is the remit of the European Parliament and not the remit of the Eurogroup. But what I can tell you is opportunity costs are real. They're equally real to costs. We learn that when we study economics. They're just less visible, but this one is quite vivid. If we don't have this delivered soon, as Europeans, we will miss out on a huge opportunity to capacity build the international of the euro. I fundamentally believe this, not as the president of the Eurogroup only or as the Greek Minister of Finance, as a European citizen. Now, to your question on AI, the challenge here, what do we typically do? We over-dramatize the present and we underestimate the future, right? So the whole debate of the day is anthropic mythos. In some months, we might have 3 versions of equally powerful LLMs that we know of. We might even have more. What does this mean? This means that what we should be seeking is how to overall capacity build our technological sovereignty. That's why I'm trying to look at the broader debate in my presentation. But having said this, what's the core challenge? The core challenge is that you need global orchestration in this technology in terms of how to govern it, and you need it at a time when multilateralism is challenged, to be frank. Do I have an obvious solution to what I just said? No, I don't. But I think that the stakes are so high that after a certain point they will force themselves. They will force us towards some type of orchestration. I really hope that this will not come after an adverse event, that we need to move ahead and as quickly as possible.
Thank you, President Pierrakakis. I now give the floor to Pierre Pimpy for PFE. Maybe you will need interpretation. You will speak in
Donc c'est en français, je vous laisse.
Yeah.
I'll be speaking French.
Si vous parlez en français, donc...
I should understand, says President Kyriakakis.
Je suis très...
Well, I'm very glad to see you in this role. I think that this really sends a strong message and shows a strong symbol, given in mind the recent crisis that Greece survived. Greece has overcome this crisis very strongly and with a great amount of strength. So I would like to understand what you would suggest to Eurozone countries that may themselves find themselves in a financial crisis as a result of debt. So I would like to understand what advice you would give to those countries that are facing such crises in the Eurozone on the basis of your experience from the Greek crisis, which has now come to an end. And then on another point, you mentioned Euro4. Couldn't that also be a problem when we think about what China and India are doing? And perhaps we're underestimating the impact of those problems. Thank you.
Je vais vous répondre en anglais. C'est plus difficile.
I'll answer in English.
In English. There are many lessons to be drawn from the Greek crisis, as you suggested at the beginning. But when people typically ask me, what type of lessons would you suggest to other countries from what you experienced in Greece, I try to tell them that the word hubris is Greek. So we don't plan to point fingers to anyone else who is in a budgetary difficulty or in a debt difficulty. What we can tell you is that we suffered significantly. We lost 25 points of GDP in the Greek crisis. This alone tells you the scope and the impact that the average Greek family and the average Greek citizen witnessed and experienced. Unemployment skyrocketed. We had 3 bailout packages implemented in Greece. But if there is one lesson, I think, to be learned from this experience, which we were the first ones to metabolize, is that you need fiscal stability. First, you need political stability. On top of political stability, you construct fiscal stability. And right now we're at a point where we have surpluses, primary surpluses, the most quickly de-escalating debt in the world, together with the help from our European partners, by the way, on this. And we're close to having our historically low unemployment. We're about to reach the historical low. And our growth rate is about double the European average. So that's the Greek case. What's the lesson? I think that if there is one lesson, it's a horizontal lesson. It's the one that we learned as well. Stability, political stability, fiscal stability, and reform, reform, reform. It requires political courage to do certain reforms. And they're quite difficult to deliver because some of them are quite painful. But unless we manage to deliver them, we won't get our house in order to be able to achieve all that we want. We need higher productivity in Europe. On the one hand, there are certain things which are obvious. It's quite good if you have the dividend of the obvious in front of you. If Europe delivers the savings and investment union, the digital euro, and all of those obvious reforms of eliminating the barriers that still exist between the member states of the European Union, you will have a growth dividend effectively in every member state. So this helps. This exists also nationally. Every country has national obvious deliverables that should you do them, they give you a growth dividend. And I think this is important to underline and codify because we have a duality as policymakers. On the one hand, we need to resolve the outstanding issues of yesterday, reform your labor market, reform your education system. And on the other hand, we need to be reacting to the emerging issues of today and tomorrow that we can't predict. So within the duality, if you have obvious things that will give you a growth dividend, as the slogan says, just do them. On exchange rates, I wouldn't be able to comment because this is ECB, pure ECB remit. But what I can tell you is that we firmly support them and we stand behind their independence.
Thank you. For ECR, Giovanni Crosetto.
Buongiorno, Presidente.
Thank you. Good afternoon. In this committee, we're going through a very important legislative period, bearing in mind that there are a lot of proposals coming from the Commission at the moment with the aim of getting the Saving and Investment Union over the line, or at least trying to take steps forward, looking at savings and trying to improve competitiveness and growth in the EU. Now, this is a laudable goal, but I would like to ask you whether we are actually doing everything we need in order to achieve our objectives. The big EU institutions, from the ECB to the national authorities, do they have a very clear mandate for what they need to do in terms of stability and for competitiveness and growth? I think these institutions periodically put pressure on legislators in relation to financial stability. I think clearly, and this is something that we will see when we're voting later in this committee, often we're talking about stability and growth, but that this affecting our market. Now, I think we're looking at the same dynamics now with the banking package that the European Commission is currently working on. My question to you is, are we really trying to stimulate growth and competitiveness? If that is what we're trying to do, then shouldn't we start from a solid basis in relation to finance and risk? Here, particularly looking at the current legislative framework. Thank you.
Thank you, President.
I think there are multiple parameters to be examined in a possible answer because no portfolio is fully standalone. And if you ask me what the core problem is with regards to how quickly we can advance certain things, I would tell you bluntly that all ideas are out there, all policies are more or less out there. The problem is that we all agree in theory, but we also need to agree in practice. I said it at ECOFIN in the morning. We talk the talk. Do we walk the walk? And this is up to the member states. Because if you agree with the Savings and Investment Union, we agree and then we say, but. And then we advance a national consideration. Now, I'm not without sin when saying this, because I represent a sovereign state, a member state, and we have our own national considerations in this regard. But what I'm saying is, that unless we realize that the opportunity cost of not delivering certain things is bigger than the status quo, we miss out. And we're missing out on making Europe, as a first step, a single market. But in reality, we have to decide, are we going to be a single market or a global power? Because we can be a global power. The question is, first, do you do the obvious things, remove all of those barriers? So to answer your question, yes, the discussions are quite technical. We need to find landing zones between the member states. We're doing that today. But, for instance, we need centralized supervision in our capital markets. Why do we need centralized supervision? I'm mentioning something that we were discussing this morning. Why do we need centralized supervision in our capital markets? Well, because I think it's quite obvious to say that you shouldn't be doing the same thing 27 times. And if you do the same thing 27 times, you're effectively not a complete capital market. Plus, asking us to capacity build the capital market supervisors in terms of the technological capabilities of regulating that market that's changing every month times 27, I can think of not many more difficult tasks than this. So it's up to us. Do we mean it? I think we should be part of a generation of policy makers that mean it. And it will make much more sense historically to relinquish part of it. That's why I would say sovereignty is not a synonym of autonomy. Sovereignty has many dimensions, autonomy being one of them. But you also have control, you also have legitimacy. And sometimes you decide that you will end up being more sovereign, more capable, if you actually decide to act synergistically within the context of a broader union, as we have done here, on many portfolios and many agendas like the one that you described. In banks, we need European champions. We don't need national champions. All of us have a tendency to be more protective about our national market, of course. But unless we realize that we need to capacity build European banks at the European level, they will not be able to compete with the American and Chinese counterparts. Let's try to think 5 years ahead or 10 years ahead, non-linearly, exponentially. If they miss out on the technological investments that I just mentioned, they won't be part of the equation, simply put.
Thank you, President Pierrakakis. I now give the floor to Renew and Anouk van Broek.
Thank you very much, and thank you, Mr. President, for being here in the Parliament today. In the European Union, we have a clear agreement that member states must keep their debts and deficits under control. And this is essential for our economical stability. But currently, in times of crisis, you see that some countries are ready to step away from these rules. So my question is simple. How will you make sure that fiscal discipline is respected in the euro area? And how do we protect sound economic policy, especially in these times of crisis? Thank you very much.
The first part of this equation is that we effectively need to understand and metabolize the lessons of the previous energy crisis. And the Commission has done this. We have brought the IMF at yesterday's discussion at the Eurogroup, as I mentioned, to also make that assessment, to tell us how many of the measures that we employed fit, first of all, into the perimeter of temporary, targeted and tailored. The IMF made a very interesting assessment, by the way, which I didn't mention, which is that the cost of the measures in 2022 was 2.5% of GDP overall. And they're saying that had you targeted the overall measures to the bottom 40% income-wise, the cost would have been 0.9%, and it would be less price distortive. So why did we make this presentation? Well, part of it is because we need to get this common understanding within the group. Right now, there has been no deviation from the fiscal framework that we have advanced. The fiscal framework itself allows for the flexibilities which say when and where you can deviate. For instance, in a severe incident, they have within them, embedded within them, the parameters under which you can see those deviations. We decided to have the escape clause for defense because we understood that defense is a collective public good, especially after Russia's invasion to Ukraine. What I can tell you is that at this point, there has been no such agreement. Right now, we're discussing the measures themselves. The Commission is advancing a series of other proposals with regards to competition policy or allowing for national taxation of windfall profits in member states, etc. We're monitoring the situation. We're coordinating between ourselves. But let me also add what I said at the beginning. What you do is a function of where you are. And right now, let's admit it, we are not in the best case scenario with regards to the crisis in the Middle East. If we look at our expectations at the starting point, we're not at the point which we would have envisioned as the best case scenario. Are there problematic scenarios ahead of us? Perhaps yes, perhaps no. Uncertainty is the new norm. We should be prepared, both in terms of the policies that we will advance to support the most vulnerable and our member states overall, also with regards to our fiscal stance and our fiscal health. The energy crisis shouldn't fuel a fiscal crisis. But on the other hand, we should also support especially the most vulnerable. This is the message that I guess all of us are receiving from our citizens in every single country. So we need to be surgical, I would say. We need to balance both. Balancing both is a function of the content of the policies, but also of the context of the situation. At this context, the Commission, and we agree with it, is advancing no deviation from the fiscal rules. Should the context change, I would say that then the headline will not be the deviation. The headline will be the problematic context itself, because this will mean that we will not only be in a stagflationary tendency, but in a much worse situation. So let's hope that this will be avoided.
Thank you. For ESN, Siegfried van Droze.
Merci, Madame le Président. Ich werde Deutsch sprechen.
So I will be speaking German. So I thank you very much for your report. I don't agree with all of things of your opinion. However, it was a real error to move away from Russian energy, and it has led to a situation whereby we've moved away, we've decoupled from Russian energy, and we have a serious economic crisis. So in Germany, we consider that to be a serious error. The digital euro, you want to bring that in as soon as possible. And I think it's strange that you are listening to experts who are based in the USA. So I have a question about AI. It offers a high potential for productivity increases, but at the same time, there are scenarios whereby it will disrupt the employment market. So which recommendations would you make to the member states in order to prepare themselves for fast structural changes due to AI? And does Europe need to have a strategy to deal with retraining and mass unemployment? Thank you.
First of all, if I may say on a personal note, on diversifying from Russian energy sources, let's agree that we disagree. I think that the fact that Europe is more sovereign and more diversified in this regard is absolutely existential for Europe's interests. And if this requires us to capacity build our capabilities overall with regards to energy, then that's a good thing. After all, this is what the calculations that we saw yesterday at the Eurogroup showcased. The fact that we made those investments post-2022 enabled us to have 12% less of an impact right now that the crisis has hit. Now, have we done, before I go to AI, everything that we should be doing in energy? Not yet. We need to further diversify. We need to further invest in grids. We need an investment of around 580 billion euros in grids. We need an investment in storage. And we need to be following all the technological innovations in the energy sphere as well, because there are going to be many. And we need to be present. I think this will significantly help Europe. Plus, the deployment of the energy union overall is going to be existentially important for the competitiveness of businesses in every country and for the viability of every household in every country. Now, with regards, quick comment on the digital euro as well. This is not American experts only participating in the IMF meetings and the World Bank meetings. They're experts from all over the world. So the person who mentioned this happened to be a European expert. But it's quite important that even American experts agree with this. Because when you're hearing someone telling you that if you do this, you're going to get an edge, and they mean it, I think it's quite important to listen to everyone. We have 2 ears and 1 mouth to listen twice as much as we speak. So I try to do that exactly. Now, final point on AI. I think that this is going to move faster than what we have experienced in the past. I mentioned that Schumpeterian creative destruction were always there. It was there since the invention of the wheel. But classical technological changes of my generation, Blockbuster to Netflix, it took, what, 2 decades, 1 decade, 15 years to materialize. The technological changes of this generation, of the generation of my kids, is going to be in the months. LLMs are changing everything in months. So that's why it's more difficult to metabolize this and more difficult to develop the policy responses in this. What's the response? Well, the response is certainly not to become adherents of the ideological positions of Ned Ludd in the Industrial Revolution and start breaking things and believing that technology is not going to be there. That's what we call the ostrich policy of technological change. The solution is to understand the impact and to try to think of how you will help primarily those who will be more adversely affected by it, people who will be disrupted employment-wise, jobs that are going to be lost. So there, of course, you need lots of help from the ministries of labor, and you certainly need many changes in education very quickly. Core change in education, the previous generation, 1 degree. My generation, 1 degree and 1 master's degree. The next generation, original skills at the beginning, lots of reskilling during their life. So this will require you to change and reform the educational systems all over Europe. Are we doing that? We have started doing that. That would be my quick answer.
Thank you. Second round of question. 1 minute for the question, 2 minutes for the answer, and I will start with Mr. Aftias for EPP.
Dear colleagues, I will talk to Greek.
No translation.
Κύριε Pierrakakis, ορθώς είπατε.
Mr. Pierrakakis, you said that energy is a public good, and I agree with you on that point. Half of Europe is in the green and half is in the red, and part of Europe is paying a high price for energy, so electricity connections are critical. That's the first thing we need to look at. Second point, we do need to ensure there is funding for aerial protection, and a shield needs to be in place. Mr. Pierrakakis, what's your view on that? I hope that you can make some progress here. Please accelerate these things and reply in Greek so that the Greek people can understand.
Σας ευχαριστώ για την ερώτηση σας, κύριε Αυτιά, και οφείλω να πω ότι μου είναι...
Thank you very much for this question. And it's very simple indeed. We have worked together. You were a journalist, and on many occasions you asked me questions, and I always answered your questions. This energy union really is a sine qua non. Electric connections and electrification, all of this is pivotal. And in that vein, we have made investment. The EIB is making progress in that direction. We need investment for storage and networks, grids throughout all countries. The existing grids are obsolete, so we need to work on infrastructure. And then on the other hand, the rules relating to the energy union do need to be modernized. We have already started this project, but we need to ramp up our efforts. I am taking on board advice and opinions from my colleagues, and together we have raised this issue in discussions among economy ministers, not just among energy ministers. It is true to say that we have very high costs that we're paying directly and indirectly, and therefore we need to have a holistic understanding and to offer shared responses. The second point you mentioned, defense. Especially following the Russian invasion, I think we can almost all agree that defence is indeed a European good, and we need to provide responses not only in silos at member state levels, those member states working individually, but we need a European level response together. We have started to implement the escape clause for defence. We requested the implementation, the triggering of this clause. we are facing a very particular, unique geopolitical backdrop, and we have very specific, unique needs for our defense budget. But of course, this is a sector where we could do much more if we mobilize all of our resources. For example, joint procurement of satellites, or using specific technologies when it comes to aerial defense. You know this very well, and I also said that this myself, our President Mitsotakis, agrees too. There are agreements and discussions also happening with the Polish Prime Minister, and I really do think we're going to make some progress in this direction at the EU level. Thank you.
Sandy Claire Fita.
Thank you, Chair. Je vais m'exprimer en français, Monsieur le Président.
I'm going to speak French, Chair. Thank you very much, sir, for being with us here today and for sharing your important messages with us. You highlighted investment, how important that is for our sovereignty, for social justice. And I would like to talk to you about fiscal justice. In 2022, the EU overreacted and spoke about excessive profits and used Article 123 of the treaty, meaning that unanimity wasn't required. But my question really is very simple. Do you believe that the EU today is facing an urgent situation which would require an exceptional response, meaning that we would perhaps be using Article 122? And then my second question is to ask your opinion and whether you would be in favour of taking action against the mega profits being made by certain companies. And on the Eurogroup, do you believe that the qualified majority could be used within the Council to adopt such a measure? Thank you.
Thank you very much for your question. I think that given the sensibilities and the opinions expressed by all the 21 member states of the Eurozone, 27 member states of the European Union on the table on that matter, that the Commission is taking a very balanced stance. And as President of the Eurogroup, I have to reflect the position that speaks for everyone. So in this regard, the decision that has been made, the proposal advanced by the Commission after the letter of certain European finance ministers on the windfall profits of energy companies, is that this is allowed, but this is allowed on a national basis. It's a sovereign decision that can be made by the member states themselves. The windfall profits is something which we did in 2022 in certain member states, and there is an experience of doing it. It was done at the national level as well. You allow it at the European level, it's implemented at the national level. So this has been, I would say, the opinion advanced by the Commission at this point. And I have to say it's an opinion that I agree with, because there are, I would say, supply chain sensibilities and supply vulnerability sensibilities that we also need to take into account in this equation. Why am I saying this? Because we need to have the helicopter view. As I mentioned before, sometimes we over-dramatize the present and we underestimate the future. We need to have the proper incentive structure in place for our overall energy system in order to make it more sovereign. So the question is, what types of decisions will, in the short run, not affect the long run? And if I may connect this to the previous discussion, because it was mentioned before that diversification was a bad idea, which I disagree with. What took place in the 1970s had effects that stuck until today. So after the oil crisis of the 1970s, the International Energy Agency was created, North Sea oil explorations ignited, we discovered Soviet energy resources, and we continued up until quite recently having access to Russian energy sources, and nuclear energy to a very large extent in France. 40% of the nuclear capabilities were developed after the crisis of the 70s. Some of the things that we decided were positive, some of the things that we decided are negative, and they stuck as we understand them and we perceive them today. So what I would suggest more broadly would be that the smart thing to do here is for your short-run response to coincide with your long-run strategy. So what's the proper way to address, I think, your question and any question in a similar policy discussion? What do we want for Europe overall? What are we trying to achieve? I think diversification is one parameter, technological innovation and energy is another, a single and unified energy market is another, So if we want all of those things plus investment, we should reverse engineer the goal that we're trying to achieve and then see what policy fits where. For the time being, having those decisions at the national remit, as the Commission suggested, I think makes maximal sense.
Thank you. I think we have something like 5 minutes left. So KGI is now request for the floor. I think on my list I have Nicolaou Alavanous for 1 minute. The floor is yours.
Thank you, Chair. Κύριε Υπουργέ, οι λαοί της Ευρώπης.
Thank you. European people are footing the bill. Prices are skyrocketing as a result of the war in Iran, which is supported by the European Union. And as a result of supporting Zelensky's regime and supporting the US and China. The energy crisis means that citizens are losing, but large businesses are not. The American stock market is recording huge profits. Our monetary policies are allowing all of this to happen, are allowing prices to increase. In the first quarter of 2026, you allowed for 6 billion euros to an increase of 6 billion euros. How can you allow this? How can you allow European workers to pay such high bills? And what are you doing about joint borrowing and joint procurement? Let me reply in Greek since you asked the question in Greek. The road to hell is paved with good intentions. That's something that comes to mind when I hear all of this. I am part of the political generation that has seen wrong decisions being made. 3 crises in Greece. We do not want to repeat the mistakes of the past, and therefore we need a common framework. We need European rules that we all agree on together. We need to see what is really workable. In Greece, I think the fact that we have been able to reduce national debt is a real success. We have the lowest level of unemployment in our history, and we have a very high growth rate. I wouldn't dare say to you all that we have discovered a magic wand that can resolve all problems. We don't have a silver bullet, but every country needs to look at their own trajectory and work out whether they're heading in the right direction. All countries are isolated in some way, but also in other ways are interconnected. In 2026, Greece is very different compared to the Greece from 2019. And facts and figures from the Greek economy show you this. We will continue to support citizens, support the most vulnerable of people where possible, but we will do so to the best of our efforts. And I can promise you that as a Greek finance minister, as well as president of Eurogroup.
End of this discussion. I don't know if you want a couple of minutes to conclude. No? Eh bien, écoutez, merci beaucoup, Monsieur le Président.
Thank you very much, President Pierrakakis. I think your opening remarks really did us all some good in this committee, and we really appreciated your speech. We do hope to be able to have the chance to have these exchanges of views with you very often. We want to work closely together, given that the economic climate is very turbulent indeed. And please let us not forget that we are not weak. As you said, we must remember that. So thank you very much indeed from me and on behalf of all of the members of the Economic and Monetary Affairs Committee. See you soon. Thank you very much.